Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with Kyle Bumsted from Allendale Incorporated. We were talking about the fundamentals on the cattle markets with these tariffs issue and the new world's worm. Finally about the fundamentals on the markets with Kyle Bumsted from Allendale Inc. The cattle markets is getting ramped up. I will be talking about that with Kyle Bumsted from Allendale Incorporated. Kyle, how are you?
I'm doing good, sir. It's beautiful out here in Nebraska. We got about 2 inches of rain last night. Crops look good, and pasture conditions look pretty good too for this time of year.
Great to hear that. Kyle, let's discuss about the cattle markets with these issues. Could you tell us what's impact on the cattle markets?
Well, recently, we've been making new contract highs. It seems like every day here this week we've made new contract highs here in both the live cattle and the feeder cattle, and that's due to the cash market being on fire. Now, a lot of that stems from good demand here, but also, if you're running a packing plant and you've got a labor contract with the union, you've got to keep those people working. So you've got to keep something for them to do, obviously. So there's some of that going too. I know box beef has been going down, but we've also got this screwworm issue out there, and I think that's going to keep the border closed a little longer than folks anticipate. So I think the Packers are still making some money, regardless of what people say on paper they're losing. I think that they're still making money myself, but that's just me. Call me conspiracy theorist. But just because a lot of people take a number of box beef and they divide it by this and divide it by that and the cash price and say, well, the Packers losing money. I don't think the Packers are losing near as much as they think. Otherwise, they wouldn't be out there bidding higher cash every week. We've also had slaughter issues. We've been slowing down the slaughter pace a little bit, and that I think will help prop up that box here as we move in towards this Labor Day holiday, which is about a month away. You're going to see here in a couple weeks, you're probably going to see some demand start to surface for that too.
How is the fundamentals on the feeder on October feeder for this afternoon?
The fundamental aspect actually looks friendly right now. You've got, all the forward spreads were gainers. We're gaining today, except for that October contract. It lagged against the November, but August gained on the September. September gained on the October. October lost to the November a little bit, but that November, it's still inverted. You're still trading October $2.40 above November. So I'm going to call that lack of volume out there in those deferred spreads. Now, today here, finishing up on a Wednesday, we made new highs going into the end of the session here. I think a lot of folks are going to use the open tomorrow to key off of. Like this October contract, probably going to key off this 229.75 to 220 or 230 area for tomorrow's pivots, and then kind of the same thing for the September feeders at 339.75 to 340 area. Kind of a decent pivot there as we get into Thursday. So there's a lot of moving parts in this cattle complex this week. And I think some of this action here today in the live cattle and yesterday and the day before were some of these short option sellers, like they had short calls above the market. So they had to go chasing in there and buying futures to try to delta themselves neutral. Otherwise, they had to either ante up or get out. And when the market's doing that, it's tough to get out of the options, especially when you're short and you're forced to pay up to get out. That can be an issue sometimes. So I think a lot of folks that were trying to get themselves out of that predicament, if you will, had to run to the futures and buy futures and try to spread themselves off.
How about the technical aspects?
From a technical standpoint, bear markets don't make new contract highs, or bear markets don't make new contract highs, and we've been making new contract highs. Technically, these charts are overbought, but they're not showing any signs of a top yet. They're not showing any signs of reversals to the downside yet. So as far as the technical picture, it's a very strong uptrend, and it's been a creeping market. You know that, like the old saying goes, buy a creeper, sell a leaper, and it's a market that's been creeping higher ever so slightly. Just day to day, it's just been creeping higher.
Is there anything would you like to talk to our audience about the consumer budget with beef side?
Yeah, that's a very good point. I keep watching how much credit card debt that gets posted here and things like that. I mean, we saw some labor numbers today, and those were decent. I mean, labor market still seems to be fairly strong. There's still a lot of job openings around for folks. Depends on where you're at, though. I know, but it is very concerning yet the price of beef and what the consumer does have to pay. So that is always on the back of my mind, and I think it's a big issue long term. So that credit card debt coupled with that, I don't know how long the consumer is going to continue to pay, but up till now, they've continued to pay up to buy beef.
How is the national debt for right now?
The national debt just keeps clicking higher. I mean, that's something there that's always a concern too. But it's just the government; they'll print more money, and the Fed they're going to keep interest rates unchanged here for a little while yet. And I think if the U.S. dollar does make its reversal here today or tomorrow here to end out the month of July, I think that interest rates could end up actually going higher here, the way it looks as far as the Fed funds forward curve. So that's something that's concerning as well. They're trying to keep policy modestly restrictive, but they're saying the economy is not performing as though the restrictive policy is holding. So I think there's still a possibility interest could go up here maybe late this year.
We will see for the consumer.
Yeah, we'll just have to see kind of what those consumer spending habits do here moving forward, especially as we get, it's crazy to think we're at the 1st of August and we're not that far away from the holiday season. We got August, September, October, November, and you're already looking at Christmas here. And in 60 days, folks are going to start to be talking about the holidays. So it's crazy to think that, but that's where we are. And in 60 days, we're going to be at the end of October. So we've got that to contend with, and then 90 days we're sitting here at the end of November, and we've got a lot of folks. There's going to be a lot of money that's going to change hands here in the next 3 to 4 months, as far as the consumer to the retailers, and also out here in the ag economy as well too. So, got a lot of money going to be changing hands here.
I know that you're right. It is pretty crazy.
Yeah, it is. It's very crazy.
What is your final thoughts on the cattle expansion?
Uh, Cattle expansion, it's tough for me. It would be tough for me to be expanding right now. I know there's folks that are doing it, and my hats are off to them. But expanding when the markets are higher, that can be kind of tough. So I'm more of an expansion when the markets are lower and when people don't want you to do it, and it's not a good thing to do when the markets are down. That's usually when someone should expand. So I do think there's a little bit of heifer retention going on based off the recent reports that we've seen. So we got to keep that in mind too, and we also got to keep our weights in mind too. That we've got record weights out here as far as the cattle go. We may not have the head count, but we've got the tonnage. We still got tonnage out here to work through. So that's something in the future we need to keep moving forward and looking through as well too. Is the tonnage that we're dealing with here? We got a lot of big cattle out here.
How is the cattle on feeds on Friday, Kyle?
Cattle on feed came out slightly bullish. Marketing number was a little less than anticipated, although you wouldn't know by the cash trade here. But the placement number was at 92%, and they missed that. But it's all made up of estimates anyway. So I don't really put a lot of weight into cattle on feed reports. I don't put a lot of weight into those USDA reports because the government has a habit. They can go back and say, well, we want to change this number from 6 months ago, and they can do that, and then that loses all credibility. A lot of people just love those government reports and just chase them and think, man, they're just great, and you got to have them. But a market trades without government reports. Markets can still function without government reports, and that's what I'm a fan of. So if we didn't have them, it'd probably be a better thing.
Thanks, Kyle.
You bet. Thanks for having me on.
This is Kyle Bumsted from Allendale Inc. on back roads of Illinois.